Welcome to the third part of the Q master class, options analysis using Q Elite on TradeStation. I'm Sagar Nandi. You already have my detail. Let's go to the next slide. Disclaimer. I'm not an investment advisor. This demonstration is for educational purposes only. I am not a trade advisor. It's not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems. In the Q master class, we are covering all the boxes one by one. Today, we are again discussing TradeStation, a specific part of TradeStation, that is OptionStation Pro. These are the topics we are going to cover. It's on OptionStation Pro, how to use that for option strategy analysis. It's not a course on TradeStation as such. Neither is it a course on options, exhaustive option strategies. It's on how I use OptionStation Pro to analyze the trades, option trades that I usually take. I will just show, not go into detail, but show the Q charts related to options. There are two charts. I'll mention them, briefly go through them. Then we look at OptionStation Pro, starting with its settings, how I have set it up, how it can be linked with TradeStation, with TradeStation charts. Then we look at different components of OptionStation Pro, that's options chain, the analysis tab, manage tab for managing trades, and search tab. And along the way, I will walk through OptionStation Pro. Q&A is not at the end. You are most welcome to ask question anytime using either the chat panel, or you may unmute yourself if you wish to do so. I don't have more slides today. We'll use the live system. Let's start with that. As I mentioned, there are few charts on Q technical analysis system, that is Q Elite running on TradeStation, that are specific to option analysis, or they are relying on option related data. These are a few analyses that are not available on Q Global because they require detailed option data. One of the charts is this Q entry alternate chart, and the analysis that is specific to options, that is the expected move. The expected move is drawn as 3 lines. They are reset every week at the end of the week. The system automatically takes care of holidays. If Friday is a holiday, then it recognizes that and it starts to draw the expected move, which is weekly expected move, after the close of Thursday. It actually redraws the lines at the end of every week, which can be Thursday if Friday is a holiday. It is drawn as one upper expected move line, one lower expected move line, and the midpoint, which is nothing but the closing price of the previous week. That is one chart, the analysis expected move on alternate Q entry chart that relies on options data. How to use the expected move? It is not a trade signal. Certainly, it's not a trade setup. However, you may use it to decide if it is too late to short. Right now, we are looking at QQQ, Nasdaq ETF, and you can see it is very close to the lower expected move. So I would say that this is too late to short QQQ. If you shorted earlier, then you might start to book profit, or at least use trailing stop on intraday chart. That is how I use it. I don't use it as a trade entry signal. The other chart in Q Elite that is related to options data uses options data for different calculations. That is the volatility chart. And I changed the chart template using hotkeys, Control, Shift, V for volatility. Here, there are multiple analyses that are relying on options data. One is the same expected move that we saw in the alternate entity chart. Then we have the, okay, let me focus on only the analysis that are relying on option data. That is here the option volatility. This line is actually option volatility or implied volatility. And it shows us whether implied volatility, option volatility is trending up or down. At the right edge for QQQ, it is starting to trend up. This is also a plot that is not available in Q Global right now because Metastock doesn't have such detailed data yet. Or even if they have the data, it is not accessible by the programming language for Metastock. Then at the bottom is the options put call ratio. The average line, the put call ratio bars, and if I change the symbol, then you will see when put call ratio is high, it will show an alert drop, alert dot, not alert dot. Let's try to change it to, let's say, CMCSA. And you can see the alert dots when the put call ratio is exceptionally high. Now there is a thought, there is a common saying, which is not useful, at least not useful for me. I don't use it for my trading. A common thought that if put call ratio is exceptionally high, the stock may stop going down. You may look at that in that way, look at this signal, but I would do that only if the stock is dropping a lot, finding support, and at that point the put call ratio is very high. That will indicate the professionals selling puts at the bottom of a stock at a very low price. When the price is just moving up down normally, like we can see at these points, when the put call ratio is very high, it has no trade signal at all. At least I don't find it useful, so I don't use it. It is there in case you see price has dropped a lot suddenly, finding probably a support, a trend line support, and that is also associated with high put call ratio, then there is a reason to think that those heavy put sales at the low price level may be from professionals who think price is going to go up. So that is put call ratio, again using options data. And then we have the candle color in the volatility chart, that is using kind of percentile calculation of volatility to show whether the volatility is high or low. And that data is not available in real time. That's why the last candle of the daily chart, this is a daily chart, doesn't have any color in volatility chart. As of yesterday, we can see it turned from red to yellow. So volatility increased. On this day, volatility increased a lot. And you may remember that was the day I entered short position in CMCSA Comcast using short call vertical. Then volatility reduced and it went back to red color. Next day, red color again, and on Friday, it turned yellow. So if you were watching it, the change in volatility color, you could decide to re-enter a bearish trade on Friday. Or there are different ways you may use that change in color. For example, if you wanted to be bearish, let me redraw the lines. If you wanted to be bearish, when I shared the bearish idea on this day, but you also knew that price dropped a lot on that day. So it was expected the volatility would go down next few days. So what could you do? You could enter not a short call vertical like I entered. It could be used, but it would cause some difficulty in closing one leg. But if you used long put vertical on the day I first shared the bearish idea, then you could keep an eye on the stock, and on Friday, you could close the short leg and continue to hold only the long put. And today it is down. If it continues to go down further, your profit will be maximized because the short put leg that you entered on this day would exit with a profit, and the long put will continue to increase in profit as and if price can go down. So that is an advantage of using long put vertical than short call vertical. Can short call vertical be used in that way, that you enter a vertical and then close one leg, hold on to the other leg? In this case, it would be not advisable in Q technique, because if we close one leg, then we would be left with the naked short call leg. That is why when I enter a vertical when the volatility is high and I plan to take out one leg of the vertical after the volatility crash, I would like to enter it as long put and not short call vertical. However, in this case, my particular trade on Comcast was short call vertical because I wanted to hold it for longer term. And I'm continuing to hold the trade. I had a small profit during the weekend and I am still having a small profit. In any case, I described this change in volatility visible on the candle color in this volatility template that you could use to manage individual legs of a multi-leg option if you wanted to do that. Is that the way usually people trade verticals? No, people enter the vertical and exit the vertical as a pair. And I also tend to do that. This is just what I mentioned, that you could use the volatility chart template in that way. Sometimes I may do that. If I'm bearish on the stock, I could close the short leg of a put vertical also with a profit and just hold on to the long leg of the put vertical. These are the calculations in two chart templates that uses options chain detailed options data, and they are not available in Q Global. Now let's look at OptionStation Pro, how I use it. OptionStation Pro is an app. If you go to the apps menu, I went to these apps. You can see left top corner, a blue apps text. If you hover on that, you will see this list of applications, and you may drag and drop them to different positions. In Q systems, all the applications are already inbuilt in the desktop except OptionStation Pro. So I repositioned OptionStation Pro to top left, that is easy to access. So if I hover out of that position, move cursor out of that position, the apps list disappears. If you hover again on apps, OptionStation Pro is positioned at the top left corner. It's easy to access in that way. Now let's open that. It will open as a separate application on its own window. And therefore, if you are using multiple monitors, you are able to drag and drop to a different monitor. But let me put it on the same monitor for the webinar. Let's first go through the settings. There are different places where we can set up how TradeStation Pro looks and how it works. Firstly, let me explain the different components of this program. At the bottom, you can see 4 tabs: Options tab, Analysis tab, Manage tab, and Search tab. Options tab is where we are now. It shows the option chains for a symbol. The Analysis tab is used to view the risk profile or P&L profile, and there are a few other things you could do there. You could also initiate a trade from Analysis page. Analysis page or tab is used to visually see the option strategy. And if you are looking at multiple strategies, you could switch on one and then look at that, then switch on the second one, you could look at that, or you could look at multiple strategies, how they are combined together. I'll come back to that. Manage tab is the third tab that is used to manage existing positions. This is a simulation account. This doesn't have any position. Maybe we'll open position just to see how it shows up on the Manage tab. And the last tab, Search tab, is very unique in a way that TradeStation has. Depending on your expectation of a particular stock or instrument, you could ask TradeStation to go through all the hundreds and thousands of option chains, different expiries, different volatility, different strike prices, and tell what is the optimal. Optimal in which way? In different ways: reward risk ratio, probability of profit, expected profit, etc. We look at that. So these are the 4 tabs. At the bottom, you click on the tab you want to see, and that will come into view. And below the 4 tabs, you have the trade bar. It is hidden. It can be configured that it is hidden. If you hover to that place, then it will open up. Let's do that. If you hover to that place or click on trade, the trade bar will open up. And currently there is nothing to trade. You can see this hide button, this down arrow with a dash. If you click that, trade bar will hide to the bottom. So that's the way I use it. Later on, we'll see how we construct an option strategy and how it will show up in the trade bar. So those were the 4 tabs and the trade bar. Now, if we go to any tab, you will see the top portion may be changing. Top portion is changing except the asset information. I'll move again. You see the symbol Comcast, then description Comcast, last price, net change. That is not changing. That is called, that is here to here, that is called the asset panel. Asset panel is not changing, and you may set up asset panel to display only the things that are useful. So to me, only these things are useful: last price, net percentage change, actual change, net change, volume. This is just to eliminate stocks that have low daily volume. We have other ways to do that, to find liquid stocks. That is our symbol universe anyway. Then I have put historical volatility, VIX volatility, just to compare whether VIX volatility is higher than historical volatility or not. It's useful information. Is it a trade signal? No. Just because VIX volatility is higher, that doesn't give me a trade signal, or certainly not trade setup, but it is useful information. That currently for Comcast, VIX volatility is higher than historical volatility. Beta, also a useful piece of information. We have that in Q Vital also, but when you are trading options, it is possible to look at that. So I have put it here. Beta shows how a stock moves usually compared to the market. High beta means it moves more than the market overall. So it's Comcast is having about the same beta as one as the market. If you had any open position, it would show up here. And if you have multiple TradeStation accounts, you could search there. Now, I'm discussing about setup. Why I explained all these columns is that you may choose the columns that you want to display here. If you right click, I right click just now and choose customize columns, there is a list of available columns on the left and the ones I have selected on the right. Your TradeStation Pro may look different. The asset panel also may look different. This is where you may go and choose the columns to display in the asset panel. And I have displayed only the ones I think are important. Now, similar customized columns option is available for other tabs also. So now I am on the option chain. You can see bottom left corner, I have selected options to go to the options chain, and I have all these columns displayed. If you, okay, here, right click, no, not right click. Here, if you click the configure, this range at the top right corner in the options chain, and you see the same option again, same choice to customize columns, and you are able to display the columns you want to see. I find only these to be useful in my trading: delta, net percentage change. This is for the options, net change, volume, open interest, implied volatility. There are other fields, but I don't need them for my trading. So I have, as is my practice, kept only the things that I'm interested in. I don't like to put unnecessary things or duplicate things. So I have removed everything that I don't use in my trading from this option chain. And the similar choice will be available. For example, if I go to manage, that is to manage existing positions. If I click the range, again, you have this customize column option for positions. And for today's orders, the upper panel, again, if I click the range, there are customized columns. There is customized column. Again, you can choose. This is one way to set TradeStation Pro. My suggestion is to keep only the things you are interested in and remove everything else. That will remove the clutter. That is not the only place where we have settings in TradeStation Pro. If you go to these settings, this is also a settings, the gear or cog icon at the top right hand corner. If you click, it will have multiple tabs: appearance, some common setting after that, graph settings used to view the PNL graphs, option chain setting, and order settings. In appearance, you may change to light and dark settings. Regular traders like to see dark color. It's easy on the eye, so I have selected the dark color setting. Font size, etc. you may set depending on your viewing preference and your terminal monitor resolution. If I go to the common tab, I'll not go through them. They are mostly standard default ones. You may make sure that your option volatility source is implied volatility. This is, I think, the default one. I probably have not changed, but you may pause the video and compare it with your settings. If you have any question, TradeStation will be the best people to explain what exactly all these are. Now I will not go to graph. I'll come back to graph later. Let's go to options chain. Here you may make sure that expected move calculation is set to optimistic. The difference between pessimistic and optimistic, it may be not named properly. Pessimistic is actually the standard calculation of expected move. We saw the expected move, weekly expected move on Q charts, some of the Q charts. Options chain also calculates the expected move, but it will be different. Why? Because option chain calculates expected move for every expiry separately. And the expected move that Q is plotting on charts is not for one expiry. It is the average expected move, some average calculation. So it is expected to be different and it will be different. It is not specific to expiry, but option chain can display the expected move. And indeed, I am displaying the expected move here. The correct choice here will be, in my view, optimistic. Pessimistic is the standard calculation, and optimistic is some adjustment by TradeStation based on their observations to more closely approximate about 68-70% of data remains within the expected move. So they have seen that if they use the usual calculation, it is not holding 68-70%, the usual one standard deviation amount of data. So they updated the calculation. They say optimistic is the default setting, but you may make sure that in your OptionStation Pro, it is indeed set to optimistic. The others I have not changed. Order setting, nothing changed. Now let's look at the graph setting. For options traders in general, the date range people like to see is now to earliest expiration. There are some option strategies where legs are spanning multiple expirations, but it is customary to show now to earliest expiration in the graphical plots. So that is the standard setting. You may make sure that is the setting here. Now comes the lower part. And here TradeStation has done something quite interesting. You could choose the expiration or expiration plus 1 day, 2 day, or 3 day. I have set it to expiration plus 2 days. And then you can define how the plots are going to look like. For my plot 1, white color, I have selected using this bar. You are able to move the position along this bar. If you move it to the leftmost position, as I have done for the plot 1, white color, that will mean current date. Then for the plot 2, I have moved it to the rightmost position. That will mean it is at expiry. And plot 3, I have moved it right into the middle. So that will mean halfway towards expiry. Usually I am trading options that I am not holding till expiry. That is, I am not trading things like iron condor usually. Hardly I am trading iron condor, which may rely on, or I should say, which may rely more on passage of time and non-movement of the stock. I'm not relying so much in my strategies to, not relying so much on passage of time. And usually my option strategies close before, usually before the mid expiry date is reached. So I wanted to see how the risk profile looks at midpoint. I have drawn it there. Later on, we'll see you are able to move this pointer left or right to show the plot 3 on a very specific date. So today, let's say today is 20th September. You are 20th September. I am seeing this from the calendar. Let's say we take a 45 days to expiry vertical trend. Let's say short call vertical on SPY, bearish trend. But we want to see not after 45 days, we want to see after 1 month how the risk profile will look like. So usually I will not change the white plot 1, that is today's PNL profile. I will not change the plot 2, the cyan color, which is at expiry. I will change this locator to match the date to, let's say 20th October, 1 month from now. you are able to do that. So that is how you use it. If you wanted to add another plot, you could do that, but that becomes a bit of clutter for me. I use the plots as, let me clear them up again, use the plot as today's plot as of expiry, and then halfway, and then I move this cursor or pointer left right if I wanted to see the profile on a specific date. So this is an important setting, useful, very useful, and TradeStation has done a good job providing this flexibility. Those were the places you could set OptionStation Pro, and there is something called option statistics. I don't use it. You can see this right hand side bar. If you hover there, it will show option statistics. In Q charts, I showed there is option volatility, one plot, and then also the candles are colored using kind of IV percentile. So yellow is neutral, cyan is very high, and red is low volatility. Here, OptionStation Pro shows another calculation. Maybe they are using shorter duration, but also a percentile calculation. If you wanted, you could pin this. You can see the pin here. If you dock it, it will always show. In case you are interested, you could dock it. How that may be useful? If you are trading some verticals and you see option volatility is low in terms of percentile. Sorry, it's not, sorry, red color is low in Q, but in this it's not low. It's going to the alert area. So actually here, red color, but option percentile is very high. IV percentile, implied volatility percentile is high. So if you wanted to use a vertical strategy, will you like to choose long put or short call? If volatility is high, then it is preferred to short the option. So you might choose short call instead of long put. That is one way you could use. And of course, if you are willing to trade naked options, you could short the put. And I do sometimes use it. I would not do that in case of Comcast. I have a bearish view on Comcast. But if a stock dropped a lot, hit the memory support in daily, weekly, let's say both of them, and fundamentally very strong, and I am okay to hold the stock longer term, in those cases I am okay to short the put. And I might, if I wanted, come here and see indeed in terms of percentile, is the volatility high? If the volatility is high, that will be another justification of shorting the put. On the other hand, such a stock has dropped suddenly, sharply, lower price level at trend line support, but for some reason it is at IV percentile green here, low IV percentile. That would tell us not to short the put. Maybe buying the call would be a better choice in that case. Will we find many such stocks which has dropped sharply and then still at low implied volatility? I doubt that, but if you wanted to confirm, you could look at this. Do I use it? No. That's why I kept it hidden. I'll go back to my default setting. I don't use it. I use the Q volatility chart if I at all wanted to use it, because whether I keep it hidden or keep it open, I have seen it doesn't affect my profitability, trade profitability. So if that doesn't affect my trade profitability, I save real estate, I keep it hidden. But if someone asks me, how is the implied volatility of a stock? I don't mind going there and sound intelligent and give an answer that it is at 69, just change to 70 percentile. But that's not useful in my trading decisions. I don't use it. Those are the places you could set OptionStation Pro, hide something, open that again, like the trade bar and the option statistics bar. Now let's look at the different tabs one by one. First, the options chain. Any symbol that you put in the symbol in the asset panel, that option chain will be retrieved. I showed earlier how you may customize the different columns. It will show all those columns for all the expiries. Which expiries? Those are decided by filters. Strike range, number of expirations, I have selected all, but if that is too much for the particular instrument, you could change it. Choose from one of these options. Not able to enter a value, either choose any of these numbers or choose all. So let's keep it all for now. Expiration types, I have selected all the possibilities. Monthlies, weeklies, quarterlies. Some people may be interested in only stocks that have weekly options, those who trade options a lot, maybe even doing intraday trading. I'm not one of them. If you are interested to look at only weeklies, you could do that. But I keep all the options expiries open, and then I look at the chains to choose the one that is of my interest. Rest is as it is. Now on the top left, there is an option to choose different strategies, but I don't find it useful. Many trading platforms have it. I would rather create my strategy from the option chain of my interest with much more flexibility and visual selection than TradeStation or any option platform to tell me what vertical I should choose. So if I choose vertical, you can see there are, let's look at the monthly expiry here. You can see it has created some verticals. Then I have to choose from them. I could go to filter and change the spread width. I made it 2. So you see 56, 57, it was 1 spread width. If I apply, then it is changing to 2 spread width, but that is too cumbersome for me. I don't create spreads, any kind of spread that way. So I am never going to use this options strategy default ones. Just choose single and create my strategy myself. Now, few more things to note in this panel. The columns I have discussed already, you could customize it. I have put all the important columns. Then we have the expiry. And you see the shading in color. If something is weekly, that is in a different color background. And these are not weekly, probably monthly. Weeklies are in a different color. Then the expiry date is there and days to expiry. Then at the right edge, for each expiry, there is an average implied volatility calculation. This is average, TradeStation specific. Different platforms will have slightly different numbers that is expected. This is the average implied volatility of all the strikes TradeStation has calculated for Comcast 24th September 2021 expiry. And based on that implied volatility, it has calculated an expected move. That's why here the expected move is specific to an expiry. You can see all the expiries have an average volatility calculation and average expected move. That's why it's different on Q charts. That is not specific to expiry, that is specific to the instrument as a whole. In a case, you are able to look at the expected move here for an expiry, and also you are able to see that as this grayed area on the strike column. So if at all you are trading iron condor, you can visually see the expected move from here. You don't even have to look up the chain header. You could decide, maybe you would decide to short 53 put by 52 put, and then on the other side you might short 59 by 61. It's just an example I'm giving. I don't trade iron condors. Mostly I don't trade. But if you wanted to look at the expected move to decide the short legs for an iron condor, you could do that. Or if you are selling out of the money naked options, I do that only for the put side. Then you might look at it. Do I look at the expected move to decide which leg to short for short put, naked short put? No. Instead, I use the Q technical charts to find the next technical support, let's say a memory line or watermark support below the current price, and I short that price. I don't look at the expected move to decide what leg I'm going to sell, because to me those Q supports work much better. But in any case, if you are interested to look at expected move, you could look at that on the strike column visually. That makes it easy. Or you could look at the header also, header for each expiry. Now let's try to create some options legs. Let's look at the market 1 minute. I am not trying to suggest any strategy. It's just for the sake of creating some options. I'm going to look at some stocks to create some strategy. Not that I'm actually going to trade it in my account. Tesla. Okay. Tesla has a trend line support. Trend line support. And the low of the price is slightly below the trend line support. Low of today is 724.46. Okay. Let's look at the intraday chart. It seems that it is stopping somewhere here, which has a this early range low, and earlier it went to this price 709. Okay, so let's say, just for the sake of it, we are selling put 710. Not that I am going to actually take such a trade in my account, but okay, good thing that I came here. See, in the TradeStation chart, I changed the symbol to Tesla, and I explained it in the TradeStation masterclass that these charts are linked with the symbol link, not only in the at a glance workspace, but also in the other workspaces. That's why when I went to the intraday chart, it was also changed to Tesla. And now you can see when I went to TradeStation Pro, that also changed to Tesla. That is because the symbol linking works with TradeStation Pro also. Between TradeStation Pro and TradeStation, it's bidirectional. I'll explain that. Let's explain that now. So let's say we are going to sell 710 put options 25 days to expiry. We want to quickly come out of it, but not too quickly in case it continues to go down. But we have a trend line support there. Let's sell 25 days to expiry 710 put option. Bid 2740, ask 2770. Now I would like to try to sell it at 2760. Now it's changing dynamically, of course, real time market hours. That's good for us. I would like to sell at a higher price. If I don't get a fill, I like to reduce my credit amount. Earlier, I mentioned during the TradeStation class that the best way to trade stocks, most precise, is to use the matrix, and that is actually true for options also, for single chain options. I could use matrix for single chain options or TradeStation Pro. If I wanted to use TradeStation Pro, if I go to the ask column, you can see it's changing to buy. Bid column, it is changing to sell. So let's click on the bid column. It is creating the order. The trade bar that was hidden, it is showing up, and it is creating my strategy. This is a single leg strategy, sell to open one lot of Tesla 15th October 21, the one we selected, 25 days to expiry, 710 strike put, and it is telling the natural price is 26.95. Natural price is a nice name for bid price. That's the worst price. But the option traders, the platforms don't want to tell us that it is the worst price. So they say it is the natural. Natural is actually the worst possible price. Very nice naming they have done, isn't it? We try to put in mid. If we try to get the bid, usually we will not get filled. So it's okay to use the mid price. How can we do that? We could click this up, down arrows on the limit price to change, or you could click on the mid price. Let's remove the lines, change to mouse, click the mid price, and it is setting the mid price to limit price, and I could place the order. It's a simulation account. I could choose GTC or day order. For options, usually I'll use day orders unless it is for booking profit. In that case, it will be GTC. And option trades, I always use limit price. Never I use market, not even stop limit. I use limit price. I don't use stop orders on my options legs. So I use limit price. It will be not desirable to use market price, certainly not desirable to use market price. So I could place the order from here, but as I mentioned, for single leg options, matrix is the most precise way. So we'll use the bidirectional linking between OptionStation Pro and matrix. Before that, I want to delete this order. You can see this X here. If you click that, it will remove the order from the order bar. I click that, the order is gone. Then I'm clicking this hide button to hide the order bar. And now let's open matrix. I have created a separate desktop with matrix. It's opening on the other monitor. Once it opens, I'll drag it to this monitor. This is matrix. On the left-hand side is the chart, right-hand side is the matrix. Now, I didn't switch on symbol linking on the matrix bar. Let me do that. Cyan global symbol list, because currently my global symbol list on the chart, you can see cyan color Tesla. It has set to Tesla. Now let's go to OptionStation Pro. We are interested for this example to sell the 710 put. If you click on the sell or the buy, it will open the trade bar on OptionStation Pro. So we will not do that. We'll click on the 710 on the put side. Right side is put, left side is call. We're interested to sell the put, but we will not click on bid or ask, click on any other column. And now symbol linking is on and it is bidirectional. So I'm expecting the 710 put 15th October expiry to go to my matrix. And indeed it has done so. And the symbol linking is working on the charts also. So we are able to see how the put options, 710 put options went up after the market open. Now there is a bear release, but we are not doing so much of technical analysis. Of course, we are able to do that if we wanted. And not only on this 10-minute fine-tune chart, everything is linked on Q Elite. So if I went to at a glance, we can see how the put options lost value in the weekly chart, 710 put, 25 days to expiry in the daily chart. Interestingly, daily displayed a bullish headwind a couple of days ago, tried to retest the level, and today the flow color turned cyan. It has some bullish pressure. It has a bull release signal. There are many momentum signals, also here. It looks like from this chart, it may go up 710 put, but that's fine. We are using a different analysis just for the sake of creating an options. I'm looking at the trend line support and I want to sell the stock lower than the low of today. And I looked at the intraday chart. I thought 710 is not a trade I'm going to take in my real account. Let's change it again, 710 on the put side. Go to my matrix. It has come. Now in matrix, I have my setting. You may have your setting. One option, and see, I'm trying to sell the higher price. I click there. This is my sell order. And that is what I meant by precise execution. If I see it's getting filled, great. But it is on simulation. You could see that price actually hit that level. The bids hit that level. Interesting, isn't it? It's good to explain that. You could see, if you notice, that the bid actually hit my sell price, offer price, but it didn't execute. Why? Because it is a simulation account. Simulation trade will execute if there is an actual trade happening at that price. So the actual trade didn't happen. So simulation didn't get a fill. If you had set it on the real account, this would have gotten filled. Why it is useful to remember that if you are practicing option trading on OptionStation Pro, on TradeStation, and I think in general any trading platform, not in any trading platform, but in TradeStation, if you are simulating options trades to see how you perform, your simulation result will actually be worse than real life result, because in real life you would have gotten filled by now, but in simulation you are not getting filled because we need an actual trade to happen. So that's fine. Let's clear the markings. Just for the simulation purpose, I am canceling this and sell it as market. You can see the short market quantity is one. Let's sell it as a market, just for an example. Why I did that? I wanted to get one record in Trade Manager in OptionStation Pro. That's the only reason I tried to do that. Okay, so there is a trade now. Let's go back to OptionStation Pro now. Today's session is OptionStation Pro. So I executed a single leg option from matrix. If I wanted to create a strategy, let's say we want to create a strategy, current price is 729. Let's say sell 730. Let's make a bullish strategy. Not that, again, I am not going to actually place the trade in my account, but for an example, let's make a bullish strategy on Tesla. Tesla is not at all bullish today, but that's fine. Let's create a vertical now. And for verticals, we have to place the order through OptionStation Pro because it has multiple legs. For a bullish trade, we would create either a long call or short put. How do we decide? How do I decide? I could buy 730, which is just out of the money. 730 call, that is 34 credit. Then I will go further out and sell something that is having half the credit amount. That's thumb rule. So we'll go to 765 to get about half of the money. And what is the implied volatility for 730? I have kept all the important columns here. You can see here 45%, 45.26%. And if I go to my credit leg, that is 41%. So I am buying higher volatility, selling lower volatility. That's not good. It's okay to trade, not a big problem, because these verticals will rely more on delta move because they are directional trades than volatility. But I can see here that by creating a call vertical 730 buy, pay 34, want to get half of that money back, 765, I'll get $17.40 back. So this is about right, vertical, but I am buying a higher volatility and selling a lower volatility. I don't like that. Let's say on the put side, could we do something that works better? For put vertical, that is bullish, we would like to, let's say, sell again the current price 729. Let's say 730 put, we sell for 34 and then buy back half of that. So sell 34, buy back half of that. So it is below 680. Okay, there are different ways of changing it. I could change the option chain to display more strikes, or I could just choose 680 and then change the strike to get $17, not 19, or pay $17. I'm crediting 34. I would like to pay 17 but not 19. So there are different ways of doing that, but first thing to check, what are the option volatilities. Here I am selling 44 volatility and buying 52 volatility. This is worse. 44 to 52, for if we leave the decimal points, 44 to 52, so 8-point difference, and here 45 to 40, 5 points difference. So when we look at the implied volatility difference and try to construct a long call or short put, none of them are what I would like. I would like the volatility to be in my favor, but that is not possible now for this expiry. So I will rather choose this one, looking at the volatility difference. So let's do that. Buy 730 call. I clicked on the ask price. Now I want to sell 765 call on the bid. If I move cursor, it is changing to sell. Now keep the control key pressed and then click the sell. Click on the bid. Keep the control key pressed first and click. Then it will not replace the first leg, but it will add the second leg to the leg we already had. So now we have both the legs and we created a vertical. That's the way, the best way in my view, in OptionStation Pro and in many other platforms also, to create the spread. Not use this spread button, but first click on one leg, then keep the control key pressed and click the second leg. We have our vertical. It has recognized automatically that it is a vertical. Buy to open one lot of Tesla 15th October 730 call, and then sell the other one 765. Natural price is the worst price. This is the mid price. So we could place the order now by clicking place order. So why don't we do that? This is an example of OptionStation Pro. Let's place the order. Now, before placing an order like this, vertical, specifically vertical, we would like to see its risk profile. For naked put, it was possible to see the risk profile, but naked put, we know the maximum profit is the credit from the naked put, not much to see in risk profile. But for the vertical, we could probably see the risk profile first. And in my trading, I always look at the risk profile before placing the trade for anything but single leg options. So this is not a single leg option. How to see the risk profile? There is a ... here menu. You could click that and choose analyze trade. I never use the create opposite trade or analyze opposite trade. Just analyze the trade that I am seeing here. And now you can see I move to the second tab, the analysis tab. And this is the risk graph. As I set up, the cyan color is at expiry, white is today, and green is midway. And you can see that from the legend at the right hand side corner, top right side. White is Now, day to expiry 25, cyan is at expiry, then day to expiry, DTE is day to expiry 0, and the green line is in the middle. So 25 days to expiry, and green line is how the risk profile will look like at the middle. So if I assume as a thumb rule that I'm taking out the trade midway to expiry, I'm not holding it to expiry, just a thumb rule. As I mentioned, we could change the green line to a specific day, but let's say middle of the expiry. And where do I expect the stock to go to? Now let's go back to Tesla chart, changing the symbol back to Tesla. Let's say I am thinking that it will go back to, let's say, the middle of this last couple of candles, let's say 755. Let's say 755 I'm expecting it to go to. So I go to TradeStation Pro. It has created some price slices, but I delete the plus minus 5%. I keep the last one. Price slice is this line in the middle. Now this is an add button. Click add and change it to 755. This is my price slide. This is my expectation that price will move to 755. That is I'm deciding based on my Q charts by midway to expiry. And now if I go to TradeStation Pro, if I hover my cursor to 755, I can see if it goes to 755 today, that is the white line, my profit will be, its approximate expected profit will be 450. It's moving constantly, 450. At expiry it will be 882, and the green line is the plot 3, it will be 430. It shows an important thing, very important thing that is true for verticals, and that's why it's important to analyze the option strategies using this graph. Whether it moves to my target 755 today, or whether it moves it halfway to expiry, that is another 12 days, profit doesn't change much, 446 to 426. Where at expiry, the stock being same price, 755 level, profit increases a lot to 875. This is what I mentioned, that verticals do not expand in profit in the early days of taking the trade. After you take the trade, it will expand profit only near expiry. And that is why it is important to look at this chart not only today and at expiry, but somewhere in the middle. And I think adding too many lines is cluttering the chart. So in the middle is fine. And if you wanted, let's say we go back to the chart. Let's say we expect it to go there in, let's say 5 days. In 1 week, we expect it to go back there. 5 days. So let's look at the calendar. So 20th. So by 27th, 1, 2, 3, 4, 5 trading days. By 27th, next Monday, we expect it to go back to 755. So I mentioned we could go to the graph and what was the date? 27th. I am moving this locator here and you can see the date is changing. I want that date to be 27th September. So let's make this 27th September. I changed the position of the plot 3 to see the date that I want, that is September 27th, next Monday, and close it. Now I can see that my profit will be almost the same as if price goes there today. It will not expand much. 47, 433, not much. Only in expiry it is expanding. So why it is also important not only to realize that verticals don't expand in profit quickly, that also means that we don't overstay our welcome period. If it hit the profit target around 755, we don't wait for the max profit. Many traders, initial novice option traders, look at the max reward, max risk, and there is some common thought pushed in the market that book profit at 50% of max profit. That is for people who are not using technical charts. If you are using technical charts to decide a target and the stock has hit the target, you may not want to wait for it to hit 50% of max profit. Is it a good thumb rule? Yes, 50% of max profit is a very good thumb rule for verticals. But if you see it has hit your profit target, then not moving or reversing, is better to book profit. And this plotting of the charts will also show that not always 50% max profit is a good idea. So in any case, it was very useful demonstration to see a particular target price on a particular date and see how the option strategy PNL is working. Once it is done, you may change the, let's remove the delete slices. I don't need the vertical lines. That was just for demonstrating. And if you click this big X, it will remove everything. And I can see it is going to take more than 1 hour today also, but that's fine. It's necessary, useful at least, to go through all the important aspects in one video. I don't want to make another video on option. Okay, clear all drawings. Now there are some other useful information. Are they going to decide when I book profit? As I mentioned, no, but there are some useful information for this vertical, and you can see that from the risk profile also. In fact, if I hover my cursor, you can see this is the max profit I can get. This is the max loss I can have in the trade, and those numbers are here. Max profit 2715, max loss okay, sorry, I am pointing to the wrong place. You see the single leg, that is a short put naked position we have. Okay, good, I came to that. In this risk profile, and also, okay, not in the risk profile, we can see positions or simulations or both. Currently the position is actually unchecked, so I'm not looking at the graph for the open position. So this cursor, these pointers I'm pointing to, that was not the place to show the risk reward for the vertical. The max profit is this one, 1850, max loss is 1650. That's good. It's better than 1:1, and that is shown here. I have kept only the important things. Reward risk ratio is greater than 1. But what I explained just now is very important to keep in mind. Reward risk ratio is 1 is greater than 1.1. But that is not deciding my exit point. As I showed you, if it hits 755 in 7 days, 10 days, my profit will be far below the max possible profit. So I will probably exit at or around that. On the other hand, if it happens to go into a loss, that's a good question. Do I wait for it to hit max loss? For vertical, that seems to be the right choice. No point exiting at 50% of max loss. That is probably one of the worst times to exit the trade, unless your technical analysis is telling that your stock's view has changed. If your stock's view from bullish Tesla, let's say it's a bullish call, let's say from bullish we have changed to bearish view, then it is fine to exit the vertical at 50% of max loss. If you see, for example, on stock charts, your stock stop loss level is being hit and your hypothesis has changed on the stock, it is okay to exit. But if your bullish view is still intact, just because just because the loss has hit 50% of max loss is not a good idea to exit the trade. That decision may be taken based on your view on the stock. Is it still bullish view or it has changed to bearish or neutral view? The decision of exiting at loss is based on that, not on whether it is hitting 50% of max loss. Again, it's important because on the loss side, that is not the deciding factor. But on profit side, hitting 50% of max profit is always a good point to book some profit, always 50, but not on loss side. So I wanted to explain that. On loss side, again, hitting 50% of max loss is not a deciding factor to close a vertical. But on profit side, hitting 50% of max profit always is a good point to book at least some profit. Do I book profit before 50% of max profit? Yes. If on technical charts, it has hit my profit target, and because verticals expand very slowly, I may book profit before that. Now that brings us to another important point. What expiry should we use? There is a thought pushed along the news media's different brokerages that 45 days to expiry. That's a good thumb rule. That's a good thumb rule. I cannot say it's not a good thumb rule. However, if you see your vertical trades are hitting, or rather the underlying stocks are hitting initial profit target in 5 to 7 days, and if you keep your expiry 45 days to expiry, we just saw that in 5 days you will have very small profit. But if you chose a lesser expiry, not 45 days, say your trade is exiting on stock terms, say within 5 to 17 days, 5 to 7 days, it is safe to keep double or 3 times that number of days to expiry. So 5 to 7 days, you may use monthly expiry, 22 days to expiry, not 45 days to expiry. Could you trade 45 days to expiry? You could. What is the harm in that? On the profit side, you will book profit small, but on the, why small? Because the stock will hit your target, but profit will not expand enough. But on the loss side, you may keep on getting bigger loss if you take it out at max loss. So that's why you may observe your vertical trades or the underlying stocks. If you are short-term trading, it is hitting the swing trade profit target in 5 to 7 days. In my view, no point going beyond 3 times that average exit period. If average exit period is 5 to 7 days, I think monthly expiry is the right choice, not 45 days to expiry, as some brokerages should tell you. Because it's not that they are wrong, they are not using the technical analysis when they say 45 days thumb rule. It is just using some historical calculation without looking at technical charts. If you are using technical charts like you traders do, then it doesn't make sense to take 45 days to expiry when your average trade is exiting within 5 to 7 days. I wanted to emphasize that, so I repeated that few times. You may play around with different expiries and see for yourself. Okay, so now we have a trade. We have also is analysis done. After doing the analysis, we may place the trade. Let's place the trade. Suppose we are happy with the reward risk profile. We place the trade from here, click trade. Again, there is a mid price and natural price. It may not get filled easily. So only for the simulation, for this demonstration, I'm using market order. In real life, I never use market order, for option trades. But let me do that for this class just to fill it, and it has filled the trade. The simulation is still there. You may click on the X here to remove the simulation. So we have the positions, and now I am going to explain another useful feature of TradeStation Pro on TradeStation. We have now 3 legs, 1 put leg, 2 call legs. These 2 call legs are actually part of a vertical. If you wanted, you could see them as individual legs like now, or see what I'm doing. I'm dragging, clicking on the lower call, dragging it and dropping on the upper call, releasing it, and it is called spread creator kind of spread. So it is creating a spread, it is recognizing it as a vertical, and it is going to show you the max profit, max loss, everything as a vertical. If you wanted to see the individual legs, you could expand it. Now you can track it and trade it as a vertical. And you could now have another vertical it's like iron condor is actually two verticals. You could trade two verticals and combine them as an iron condor in this spread manager. And we may keep the naked short put as naked short put. And if I wanted to see the risk profile, now it is of position, not simulation anymore. I could see the risk profile of the call vertical, and I could see that of put, naked put, and I could combine them. This is my risk profile. Usually, if you combine, that will be useful for people who have many positions on a single instrument. For me, I'm swing trading stocks, and if I'm trading options, they are replacement of the stock positions. So usually I'll not have many different kinds of strategies open, but of course other people may have that. So I usually am happy to look at one strategy at a time. Combining them will not show me the picture I want. So this is how you may create, first of all, create spreads. Look at the volatility on the left hand side or right hand side corner to decide you want to have a bullish trade, but do you want long call vertical, short put vertical? Look at the risk profile. Specifically, look at your expiry and profit. Let's change it back to the default. I like the default, midway to expiry. How is the profit? Is it expanding enough? If not, you may change the expiry itself. And then if you place the trade, you can manage them. Now let's go to the manage tab. This is the manage tab. At the top are today's orders field. We filled one spread and one single naked put. One is cancelled. It's you are out. So let's close that. You are out is cancelled. No problem. And then I can see the positions at the bottom. I can see their PNL. Total Tesla has 30, or just not change to 45, it's changing in real time, 45, $30 loss. And these are the losses in individual PNL in individual strategies. Again, you could drag, drop, and create individual legs from that, but I would not do that. Usually you don't do that. Vertical is vertical, we combine that, and naked put is naked put. From here you could close the positions by clicking here, close the position. Let's place an order now. This trade, the long call vertical, we placed for 1690. So let's say $17. So we would like to place an order at 50% of that debit amount. So 1690, let's say 17. I'm calculating on the other monitor using calculator. 17 into 1.5 is 25.5. So what did I do? I calculated what is the 50% profit of say $17. I'm adding little bit 69 to 70. There's some brokerage commission, but no problem. Let's say $26. So I am placing an order for $26 to close the trade. And this is the case where I will use GTC order. So let's place the order. So I am trying to close the trade, the vertical position, at 50% of the debit amount I paid. It should be a credit. Negative number, do you wish to continue? No. So okay, let's credit it first and then change it to 26. Okay, good. That was an alert that it should be a credit. Fine, 26 credit. Place the order. Price is below last quote. That's fine. It's not there yet. Would you like to place the following order? It's a confirmation. Yes. Now I have a order that is received, expiry, GTC. So if it hits my 50% of debit price, the buy price for the spread, it will exit. Now I have also a short put for which I got a credit of 27. So I'd like to exit at 50% profit. So I will place those orders. That was 27. So let's try to book at 50% of that. Let's say 23. Sorry, say 13 debit. Again, I will change it to GTC. Place the order. Confirmation, yes. So I have placed the 2 profit booking orders, and these are not speculative single leg long options. A short put, which I have placed an order to book profit at around 50%, slightly better than 50%. And the vertical also, whatever debit I paid, I'm trying to get 50% of profit of that. As I mentioned, it is always a good idea to book some profit at 50% of that debit amount. You could say 50% of max profit or 50% of debit amount, both are fine. Those are my GTC orders. And then I will track the stock using my technical analysis. If it is hitting the expected level, let's say it's hitting even the watermark level and not breaking above that, stopping there, showing indecision at the top, like it showed here, showing bear release in real-time chart like it is showing here. I have some profit, but I have not hit my 50% target. So my GTC order would not be filled. Then I would right click on them, cancel replace, and change it to the mid price at that time. Try to fill at mid price. If not, natural, which is a nice word for the worst price at that time, I would try to close it at that time. So my default orders are always there, GTC order. Then I will look at technical charts to see what to do, if I want to change it or not. And I don't want to place this order, the update order. So let's just close it. So we selected the manage tab also. Now, what was my hypothesis? In about 7 to 10 days, it will go to 755. What if I wanted to choose the strategy suggested by TradeStation? Not the strategy I created based on my option chain analysis, which is not a bad idea, by the way. I have traded options for many years for verticals to look at the volatility, get a credit debit calculation where credit is half the debit or debit is half the credit, like that. It creates an attractive reward risk ratio, like you saw. And then if your direction is right, you are booking the profit without staying beyond the welcome period, you will do quite all right. That's my experience. Now, if you wanted, you could tell TradeStation Pro. So this is Tesla, and I am choosing bullish strategy and not unlimited risk. I don't like unlimited risk. You may not take it also. So unless it is a short, the put, that's fine. Okay, limited risk. And I know limited risk. Okay, let's say include call strategies, include put, include buy, include sell. So these are check boxes. Important thing is what is the target price and when I am thinking it will go there. So let's say it is going to go there by 28th, and then I have to change the percentage so that here it goes to 755. So maybe 3.5%. 754.92, close enough. 755 is changing dynamically. Fine. So I am expecting the stock to go to 755 in 8 days, 8 trading days. And you could change the date. And then asking TradeStation that show all the best results. By what? Now, again, as I explained just now, looking at max reward risk ratio is not useful. In real life, you will not wait for max reward if you are also using technical analysis. You will not even wait for 50% of max possible reward if you are using technical analysis to place the trade, to exit the trade. So in that way, looking at reward risk ratio, certainly not useful because that is going to give us max reward, max risk ratio. Looking at probability of loss or probability profit is not useful because that is not using the technical analysis. It's just using the option volatility to show you the probability of profit. In real trading terms, not useful. However, many options platforms or maybe even some teachers will say, look at probability of profit. It's not useful because we are not going to wait till the expiry. If you are trading like the way I'm trading, we are using technical analysis. So what may be more meaningful, at least for me, is to look at the projected profit, that when it hits this price, if it hits it within 8 days, I'm going to close after 8 days. What is my projected profit? No point looking at max profit loss because I'm not waiting till expiry. Probability of profit is also looking at all possible values from now to expiry. So not useful. Projected profit. Where is projected profit? Projected profit. And run search. It will create a table. Now, if you right click on the table, you could customize the columns. Certainly you could, but let's click this best fit all columns. It will show the columns in a nice way. And you can see the projected profit, the biggest one is here. And you can see different projected profit, but I mentioned in the last class, I would like TradeStation to do some improvement. Though it is sorting by projected profit, and that is an inherent challenge of how to sort the orders. Not all of them have same max loss. It is not possible. Different strategies. Not all of them have the initial debit price same. It's not possible. So we have to live with that way that options works. Different strategies will have different max loss. It's not possible to fix the max loss. Let's look at this projected profit. Now we have something in mind that when we are trading verticals, we would like to have probability of profit reasonable. If it was 80% with very high projected profit, that probability of profit 80% is not meaningful, but 49% probability of profit meaningful. In any case, as I mentioned, this is calculated looking at all possibilities from now to expiry, all the implied volatility, but that's not useful. We are going to use technical analysis. So it's no harm looking at that, but we don't put so much weight on that. Expected value, again, it's a statistical calculation, looks at all possible variations between prices between now to expiry. It's not useful in real life trading if you are using technical analysis also. So what instead we do, we click on the analyze button to look at the risk profile. Click the analyze, it will open the trade. Now I can see here the actual position vertical is also selected. Unselected. Oh, okay. It just gave me one naked call. Okay, that's good. We looked at that. When I did the search, you see the possible strategies are sell put, buy call, sell put vertical, buy call, and buy call. But let's say we are not interested in naked call. Usually I am not. So let's change it to not bullish limited risk vertical. Run the search again. Okay, I go back to my analysis. I'm not interested in this naked call, delete it. Come back to search result. That's good. Now the projected profit has come down. That's fine. Max loss has also come down. Probability of profit for the top result is 46%, not unreasonable. Let's analyze that. And it happens to be a what? It's a call vertical. You see, the one at the top is call vertical, and this is a put vertical. The red colors are sales. This is a bullish strategy we are looking for. Why bullish strategy? Because you see here we have expected the price to go up. So anything that is in red color, that's a short vertical, that must be short put. And these are buy strategies in blue color, that must be long call because we have a bullish strategy seeing here only at bullish. So let's look at the top. Interestingly, it brought the long call vertical to the top. That was what I also selected manually, looking at the implied volatility. Now I could not go through all the options, change all the expiries. You see, it is choosing 1st October, whereas when I took the trade, I used some default rule, some say 1 month to expiry, and I choose 15th October. But it is saying if really I think that it is going to hit 3.5% upward move in 8 days, then I should not go to 15th October. I should choose 1st October. Let's look at the analyze tab. This is the simulation. The others are positions are unchecked. And now if you see the green line, what you could do, you could now place one slice, make it 755. That is our target price. If you wanted detail, you could go to the graph. The green color, you could change to match which date? 7 to 8 days. 28th September. Okay. In real life, I don't do that. I just stay with the midway to expiry. But this is a facility available, so I'm demonstrating. In real life, rough calculation is enough. You know, for options trading, all these are some statistical calculation. Do they exactly match PNL? No. So no point trying to be so precise in my view. But the demonstration, this for demonstrations, I set it to 28th September. And this is the new simulation. See, on the green line, I am getting $115 profit. Again, the challenge is the max loss will be different for different trades. That's a very big challenge, in fact. So we have to, for demonstration, in real life, I'll not go through all this, but for demonstration, this vertical that I have, here the max loss is 1690. And for the new vertical, the max loss is 167. It's about 1/10. So if I change it to 10 quantity, max loss is 2000. Okay. Change it to 9. Max loss is 15. I'm reading the numbers. Max loss is 112, and this is 16, somewhere close by. So you could try to do that in real life. I don't do that. I just look at it individually. The point I was trying to make, that you could decide one expiry strike price yourself, or you could let TradeStation search different data based on different parameters. I think projected profit makes more sense. Look at that and just see if that is making sense. So if it is making sense in itself, let's just change it back to 1. Max loss 181, max reward 141. Or you could read it from here. Okay, max loss is 260. Why they are different? They're a little bit different. Not sure why. But in any case, maybe not sure why it is different, because I have locked the price, probably the buying price. Maybe I have locked this price and price is changing. No problem. No problem. But in real life, you could look at the max profit, max loss, or the max profit, max loss, reward risk ratio reasonable or not, and then decide to trade either the one you decided or the one suggested by TradeStation. The one suggested by TradeStation, will it be better? Certainly it will be better, but it will be better provided your hypothesis is correct in the search box. What is the hypothesis? That you are exiting the trade after 8 days and the stock is at 3.5% higher price level at that time. Now, these are quite rigid. So we in real life, we don't expect it exactly to go to 3.5% up exactly in 8 days. That's why no point trying to be so precise. Roughly, you can give some parameter. You could choose one or two from this list. And if you wanted, you could reduce it to 20 and search again. You could look at one or two of them, look at the graphical charts of the one you had in mind and the one suggested by TradeStation and decide on one of them. That's why I mentioned in the last class on TradeStation that if you are not in a hurry to place the vertical trade or other strategies, not in a hurry, then only you may use this search. If you want to place the trade quickly, we have these guidelines, the guidelines that I use that works quite well. You could simply use that for verticals, and you could use different such guidelines for different strategies. That is how you may look at options chain, the asset bar, the option chain, look at the implied volatility to decide the legs, analyze the trade, place the trade and manage it. By the way, interesting, isn't it? Market was very bearish, but I relied on the trend line support, and in simulation, I had to get filled with market price, the worst possible price. But still, both my trades, well, simulation trades are in profit. So if I actually place the trades, I would have even better profit by now. Why did I mention that? I mentioned that because technical analysis is quite useful, especially the Q analysis, to decide the direction of the trade. And then you decide your trading strategy. Either you use intraday analysis to buy the stock or short the put. Short the put actually works pretty well if the volatility is high, or you could take a vertical if you are not sure if it will move immediately or it will take some time. Those are the different parts of OptionStation Pro. Will you use search? I do tend to use. If I am using an options analysis after market close, I use the search to compare with the one I have in mind with the one that TradeStation is giving. If I am placing a trade during market hours, I may not want to go through the search. I use my usual guideline to get half of the money back. And usually I may use 25 days to expiry, unless I am taking a trade against the market direction, in which case I may go to close to 45 days to expiry. But 25 days to expiry is otherwise better for me because most of my swing trades exit, most meaning more than 70% trades exit within 5 to 7 days. And you can see now the existing positions are shown up in the option chain also. I have two short legs, one long leg, one long, one short for vertical, one naked put. So all those are visible. My PNL is also here. Open trades are also here. Such facility. So those are the things I wanted to cover on OptionStation Pro. And now you see when you are using other platforms to look at different strategies, in fact, TradeStation has done an excellent job in looking at the strategies. And even better than that, it has given you a search facility to get the ones with max projected profit. Instead of trying to create strategies, you could click on some of these to analyze them. So I looked at one long call. There's a blue one is long. This is red, must be short put. We could analyze that. Let's delete the old one. And let's change the graph back. Okay, not sure why it is. Okay, let's delete that. The chart seems to be a bit distorted, not sure why. But no problem. It should work on your platform. 1st October, nearest expression. Never mind. You could look at the different search results to analyze. You may check why the graph is coming like that. Usually it will come properly. That's all that I wanted to cover in Option Station Pro session. You may try out the different features. Next class will be, let me think about the date. I'll announce it soon, maybe sometime this week. I know some of the traders mentioned they are not going to be available, but I'll record it anyway. Thanks again for joining. I look forward to seeing you in the next master class. Have a great day and no reason not to do that. Trade profitably. Thank you.